What is up, guys? Welcome back to the channel. Welcome back for another live stream and a very interesting one, guys. We saw a massive trap for Bitcoin early on, followed by a huge pullback, and now we got to see exactly what is happening, what the key levels are. And we got a lot more stuff to cover. We're going to go into the economic calendar, look at the key events to look out for in the coming days. In 24 hours, tomorrow, we have a massive day. There's so much data coming out, which of course we're not used to anymore due to the government shutdown, but now it's all piling up on us. And finally, the Fed is getting some info, and that of course could play in our favor and put some pressure on the Fed to continue with the rate cuts in January. We still have a long time until then, about 6 weeks. The next Fed rate decision is on January 28th. So yeah, guys, let's get into it. Hope you guys had an awesome week so far and everything's going good, although the market is not looking too pretty. And yeah, guys, let's go and start things off here with the news and the data to look at today. And then we get into the charts. Of course, critical right now to look at the exact pivot points for Bitcoin on the major time frames. And that's exactly what we're going to do. But let's get into the news right now and see exactly what is going on there to see what we can expect in the coming days. So here we have it, the economic calendar. And these are the events that moved the needle for the price for Bitcoin and the markets in the last few days. And there we can see that the non-farm payrolls from October came out yesterday, Tuesday. And then we also had, yeah, that was yesterday. Sorry, guys. Bit confused here. It's Christmas. It's every day seems pretty much the same. So a lot going on and therefore I lose track. But yeah, we had the delayed data for the non-farm payrolls from October come out. They dropped. The previous was 108, now 105. And then we saw the same thing come out yesterday, the NFP for the November data. So we saw that that is actually positive data, better than forecasted at 50K. Previous was 105K, as we saw the same day released. And then we got 64K. Is that good for us or is that bad for us? The truth is, we want pressure on the Fed. So when this kind of data comes out, jobs data, inflation data, and it's positive, it takes the pressure off the Fed to drop the rates, and therefore not so good. But then if we look at retail sales, unemployment rate, and so on, this is all negative stuff. All this data is coming out in red, and that again puts pressure on the Fed. Today we had a big day in Europe. We saw the CPI data coming out of Great Britain, and then also from the Eurozone. And there we saw that came out lower than expected. Therefore, pressure on the Fed in for the BOE interest rate decision that we have tomorrow. Tomorrow we have three massive interest rate decisions. We have the Japanese one, the BOJ interest rate decision, then we have the Eurozone interest rate decision, and of course the UK, the Great Britain interest rate decision as well. And we're expecting a drop of the interest rates in the UK from 4% down to 3.75%. Then we're expecting a hold on the deposits and on the interest rate for the Eurozone. And then, of course, we have the BOJ interest rate decision where the previous is out, but we don't have a forecast number here in the chart. That is taking place tomorrow at 10 p.m. Eastern time. So I'm going to go live tomorrow, actually, when all this massive data drops. We can see that the ECB interest rate decision and also the CPI data and the jobless data all comes out right around the same time in the US and in Europe. So really, really interesting time to look at the charts and to be aware of what's going on with the Bitcoin price, because that data can, of course, have a massive impact. The same as it is with FOMC. Whenever we have ECB interest rate decisions, the press conference and the tone during the press conference moves the needle for the price much more than the actual data that comes out. So we got to keep our eyes out for that as well tomorrow. And I will cover everything on tomorrow's stream. So make sure to be around tomorrow. So that's 8:30. 8:15 the first data drops. This is 2:15 Central European time, 8:15 in the morning Eastern time. That's when I'm going to be live tomorrow. So really important, guys. Keep your eyes out for that stream. Take notes. I will publish it as soon as I wrap this one up, and I will also bring out a new data sheet tomorrow. I've been working my ass off lately and have had no time for really for these streams and so on. So we're still working to get the ball rolling here, and the target now is with the new year to really get a schedule going where we're going to be live on a daily basis, at least 6 days a week, and yeah, take the opportunity of a new year starting to start a new schedule here as well. I try to be way more consistent with the streams, but guys, it's been impossible, and I'm really trying to get everything out of the way now so I can really stick to a schedule in January. Then what else do we have coming out this week? We have the PCE data dropping from the US and the existing home sales. This is all massive data. And of course, after we've been in a data vacuum for 2 months, basically, we had no October data. And then all the way halfway through November, there was nothing. 54 days, I think the government shutdown was the longest one in history. Therefore, of course, we have the Fed really has some catching up to do. And that's a good thing now, guys. As we know, the markets usually the price needle usually moves a lot more based on the rumors. We have the interest rate decision in the US at the end of January on the 28th. The more data we can come that gives us a positive outlook towards that interest rate decision, of course, makes it more likely that the Bitcoin price continues upwards. We've seen the Nasdaq, the S&P 500, and gold all trying to print new all-time highs right now, but Bitcoin is massively lagging behind. And we get into all of that in the coming streams. Today we focus on Bitcoin, we focus on the key levels and on the key data, of course. As we can see now, talking about data, Polymarket is estimating right now the chance for a rate cut in January at about 22% for 25 basis points. And of course, for larger cuts, even less than that. But the no change has gone down from about 83% to 77%. And that's exactly what I'm talking about. The more pressure we can put on the Fed with negative data in the US, ironic as it might sound, the more likely it is that they will cut rates, right? And that we see we had 77%, but with all the data that's rolling in right now, this could really change by the end of January, and we could potentially see another rate cut, which could, of course, be assets such as Bitcoin and the crypto markets. Now, we see we had a massive pullback right now, right? And we saw that we pumped over $90,000 again, and then that candle on the 4-hourly chart turned into a massive wick. And then if we look at the liquidation levels right now, we have a liquidation level, but the strongest one is above us. So what the market is trying to say with that right now is that we're trying to liquidate short positions rather than long positions. This gives us a strong indication that the market is trying to move upwards. We'll get into all the levels, guys. Stick around. We get into the charts after we covered all this data here to give you a better view of on-chain data, and of course in combination with the news and everything that's coming out, and combination with data analysis and technical analysis just gives you a better outlook than if we just look at the charts, right? And then now, this is very interesting here. This represents the bull, right? And then now, this is very interesting here. This represents the bull market basically right now. We can see here, those were the lows that we came out of at the end of 2022. And then we saw that the Bitcoin price started moving upwards here. And there we see that this then started turning neutral first. The white always represents neutral, and then this is taker or buy dominant when it turns green. This is purely spot action here. And now we can see that we came out of, we see this every time. We come out of red, we go neutral, we go buy. We go neutral, we go buy. Whenever we don't turn red, we switch between neutral and buy. Whenever we don't go green, we switch between sell and neutral, right? We have the same thing here. And now we're coming out once again out of sell pressure here for spot action, going into neutral, and of course, the logical next turnaround here is that everything turns green again and we start seeing spot action picking up again. Everything we see right now within the current range that we're in is purely based on spot action, but it's very thin. And you can clearly see that it's purely based on spot action here, just on the open interest, right? This is the open interest all the way back till summer. And there we see here October 7th is when we peaked, and from there it dropped off. And now it's basically been completely flat here since the end of November. You can see here right now, open interest at its lowest here throughout the entire year so far. And therefore, for open interest to pick up again, of course, we need spot action to pick up again to give us a good floor for the gamblers, for the leverage traders to have massive support below them in order for them to take on leverage positions. And this is currently not happening, and therefore we need to break one key level in the charts that we will get to in a second. Here we see also with the ETF inflows and outflows. Last week, of course, we had the largest inflows here in about 6 weeks. We had 4 straight red weeks, followed by very, very thin inflows and outflows. And now this is basically here already completely eliminated again. We already have double the outflows that we had in inflows last week. And therefore, this is not really helping us here from an institutional perspective, that no one is really picking up Bitcoin at these prices right now. And institutional investors kind of work the same way as leverage traders work. They want to enter the market when it's not a FOMO move or something or a fake out. They want to really break certain levels and flip bullish again or move down to lower price targets to get a better purchase price or a safer purchase price for the asset they're looking at. In this case, of course, Bitcoin. Right, guys, that's all the on-chain data that I wanted to cover today and the news. Let's get into the charts now. And we're starting out here on the smallest time frame right now because, of course, we need to see exactly what's going on right now. So we see a massive fake out here. Let's look at exactly what's going on here in this range. So all the way back here till Friday, 21st of November here, when we basically printed our current low here right at $80,000, then started moving upwards here and started printing here this higher low structure that was clearly visible on the daily chart as well, which we'll get to in a second. Now here locally, we can see that we've been trading here in this downtrend. Pressed down by the dynamic trend line here. We also see the 50 EMA here right in alignment with the 38.2 on the Fibonacci retracement for that entire range. So that is the key spot right now, the $89,000 area, an area that we've been talking about here since actually we've been all the way at the bottom at $80,000. As we can see, to flip bullish on a chart, what we need to do always is get back above the prior or the last significant lower high here. And the first step to do so is usually to reclaim support that has now turned into resistance. So let me show you exactly what I mean here. We printed this bottom. Here's the downtrend, the local downtrend. The yellow trend line here marks the larger one on a larger scale. And here's exactly where we broke down. We came down here. Then we saw that we tried to break out. Guys, I don't know if I'm still live. I just saw that I'm disconnected here on OBS. I don't know exactly what's going on, but I think I might. I'll be right back. Okay, I think the internet connection is pretty weak. Need to do something about that, but yeah, guys, that's the key level. Then you see that not only that we have that pivot point that we want to get above there and confirm above, we also have the 200 EMA. So officially to flip bullish, what we want to do is get above that pivot point, but also on any chart, if you look at it to see if it's bullish or bearish, you want to look at the 200 moving average. Here in this case, it's not the 200 SMA, it's the 200 EMA, but it lines up perfectly here with those range highs. That's what we want to get above. And then, of course, it becomes very interesting because then we're also approaching here. That has been moved. Just a second. Then we are also right in alignment here with the diagonal resistance line on the larger trend, taking us all the way from the all-time high, the current all-time high, down to our current range. So an absolute massive spot here. If we can now get above 92,800 roughly on a 4-hourly closing basis and confirm that level now as support and continue upwards from there, then of course that is a huge indication that we're moving upwards towards the $100,000 range. And for that, I'm going over to the daily chart. Here you can see it. This is the exact spot where it becomes interesting on a daily chart. So $100,000 range. Same thing here again. Of course, to flip bullish, what we want to do is to get back above the prior lower high in this downtrend. And there we can see exactly what we just saw on the 4-hourly chart. Here's the structure where we've been printing lower highs and lower lows all the way down there. And the last significant lower high here in that structure is right at $106,000. But to get there, we need to do the same thing that we're trying to do here with the $89,000 level on the 4-hourly chart, reclaim prior support that is now resistance. So we want to get above $101,000. So that is, if we break out now above that $93,000 level on the 4-hourly chart, that would be our next target here, the range between $100 or $99,000 to $101,000. If we can reclaim that at support, then of course we're right here also at the 200 EMA here on the daily chart, and then of course the same thing on the 4-hourly as on the 4-hourly chart. To officially flip bullish here, we want to get back above that moving average, and then we look at $106,000. That is the exact level that we want to get above here to flip bullish from a price action perspective, to get above the last significant lower high here, and that of course then would put us above the 50-week moving average as well on the weekly chart. Guys, sorry, this is a bit of a shit show here right now. My internet connection is absolutely messing up. I had it last time already. I thought I fixed it, but I'll make sure it's in order for the next one. Yeah, so guys, key level here. Now we see the Fibonacci retracement here for that last uptrend that we of course lost. We came down to the 78.6, found support here at a newly suggested trend line, which is in perfect alignment with the 100 moving average here, so giving us massive support. Meaning if massive support breaks, of course we can expect a huge move to the downside. Next level here would be right at 70,000, and then at some point we would expect a relief rally towards the 50-week SMA. As I told you guys, for me it's still the most likely scenario that that we're taking it that we're getting back up there from here, from right at the $80,000 level. I just heard that there's no volume, guys. I've been talking. Let me just check. Hey, Josh, can you hear me right now? Just let me know in the chat. I can see that the volume bars are moving, but I just read in the chat that you can't hear me. Okay, I just heard that. It's good. Okay, so that is the key level that we want to get above here. There we see the same thing once again. The 50-week SMA here, that's the key moving average. Of course, historically, it's always been the indicator that told us whether we're in a bull market or in a bear market. And historically, we have never been able to reclaim it as support once we lost it after putting in a new all-time high. So that would be a first, and therefore a massive task here for Bitcoin. And therefore this is exactly also in the target area that we're looking at here on the daily chart if we get a breakout on the 4-hourly chart. So you can see here the moving average is right at $102,000, and there we see the same thing that we need to do here, that we're trying to do then on the daily chart. There, first reclaim prior support that we lost. The last significant support level here sits right at $108,000. If we could do so, then of course a massive chance that we get another test of the 8-year resistance where we're connecting all the prior cycle tops. Of course, if this now doesn't hold here, you can see we have massive support, not only what I just mentioned, also from a Fibonacci retracement perspective. If we take the retracement for the entire bull market from the bear market lows back in 22 to the current all-time high, there we can see the 38.2, which is of course a significant level here. If we take the Fibonacci retracement to any of these highs here in our current bull market, we always correct it down to the 38.2. So that is giving us massive support here, that cluster that we see right here. And then of course that aligns here as well with the 78.6 of that uptrend from the April lows to the current all-time high as well. And if that breaks, then it's pretty much very, very clear that we're going all the way down here towards that level here, right around the 200 moving average, which historically has always been very close to the bottom for Bitcoin and bear markets, and also the 78.6 on the Fibonacci retracement if we're retracing the entire bull market, right? That has always been the case. You can see it here back in 2021. We came below the 200 moving average and near the 78.6 you can see here in 2017. And so that is an area here between the 61.8 and the 78.6 here, between $38,000 and $58,000. Of course, a massive window to find a bottom, but of course we don't want to be knife catching. We want to be looking at potential levels where we can buy back Bitcoin after exiting the market here at lower price levels, and therefore we utilize DCA strategy. That's another one that I will get into in future streams, where I will talk about my strategy that I utilized from the previous bull market and bear market in 2021 and 2022, and how I managed to more than double my Bitcoin position just by doing a very, very basic strategy here going into the next bull market. And I will share that with you guys here in an upcoming stream. So yeah, guys, from this perspective, for me, it's still the exact same thing here. If you're in doubt, always zoom out, look at the key support, where it's coming from. It's not coming from smaller time frames. We're getting massive high time frame support. And therefore, if we start closing below here now on a weekly closing basis, that gives us strong indication that we're going down here to the 74 to even $70,000 range here, which is of course really strong support from a price action perspective. We can see here prior highs, then here massive support back in April, March, and then of course also the 50 on the Fibonacci retracement. The thing is though, whenever we look at the Fibonacci retracement and the 38.2 fails, the 61.8 gets a massive hit rate, and there you can see it lines up perfectly with the 200 moving average. So eventually I expect the price after rejection at the 50-week SMA to dwindle down here, to come down to the $70,000 range, then eventually to the $60,000 to $55,000 range, and potentially even lower than that. A lot of things have changed on the dynamics of the market and in this cycle. So yeah, guys, a lot can change, right? The same thing with the 50-week moving average. It's always been a clear indicator that it confirmed us that we're in a bear market or bull market, and we never managed to reclaim it and get back above that and confirm it as support in any of the cycles. But of course, nothing will forever remain 100%, and eventually it will happen that we get back above that, confirm it as support, and just had a massive trap and continue in our bull market. And that's the key level that you guys got to look at. If we dare see that we can confirm it as support, that's a massive indicator that we're going back up towards new all-time highs. If we see any signs of rejection there, then a massive indicator that we're continuing downwards to our bear market lows. Right, guys, I think I have it all covered. If you want to hear about anything else, let me know in the chat now before I wrap it up. And of course, as promised, I will be live tomorrow right around 2:30 p.m. Central European Time, 8, or actually earlier than that. Let's say right between 2 and 2:15 Central European Time, and 8 and 8:15 Eastern Time in the morning. So I will, of course, let you know over on X. So make sure to follow over there as well. That's always the easiest way, the fastest way to stay up to date with everything I do in and around crypto. And yeah, guys, that's basically it here. I have nothing else to add right now. I can see in the chat, no questions right now. I can see that the sound came back. So that's a good sign. And yeah, guys, on that note, I'm going to wrap it up. And as you can see, we're working here. I'm not just skipping the stream and not planning to do it consistently. I'm just working on things, guys, and I'm really trying to bang everything out so I can fully focus on being consistent in the new year, give you streams at least 5-6 days a week. And then also I will get way more active with repurposing the content to share it with you guys, all the highlights across social media and so on. So a lot to look forward to. And yeah, guys, if you're new to the channel, if that's your first time watching right now, then I appreciate it that you made it all the way till the end of the video or the stream here. And yeah, the only way you can pay me back here, you can see there's no links, no exchange links or anything, no buyback or wreck yourself kind of links. Therefore, all you can give me is a like, perhaps a comment, a share, a subscription, activate that notification bell, and all that good stuff. Now, guys, I'm out of here. And as always, happy trading and see you soon.